Hey all, welcome to FinSights Wealth Your Way by FinvestInn. I'm your host Narendran. Here we break down complex financial topics twice a week to help you make smarter decisions with your money. Here we talk about market trends, policy changes to smart saving tips, investment insights and managing debt. We cover it all to help you make informed financial decisions. Whether you are saving for a dream home, planning for retirement or just aiming to manage your day-to-day budget better, we have got you covered. Let's dive into today's episode. Today, we're going to talk about something that's been making headlines across the financial markets. That's nothing but gold. In fact, gold prices have recently hit an all time high, touching 91,696 rupees per 10 grams earlier this month. And that's not a lot of people wondering, should I be investing in gold right now? Gold has always held a special place in Indian culture, from weddings to festivals, from family heirlooms to retirement savings. Gold is woven into the fabric of our financial decisions. But here's something interesting. This week, Zero the CEO Nitin Kamath shared some fascinating data showing that gold has actually outperformed the Nifty 50 over the past 25 years. Gold has surged by a massive 2000% compared to Nifty's 1470% return. And just this year alone, while Nifty has declined 2%, gold has already risen by 18%. So, today we are going to explore whether gold deserves a place in your investment portfolio, how much of it you should own, and what's driving this current gold rally. Let's start with what's happening right now. Gold has been on a tear lately, reaching record highs both in India and globally. But what's driving this surge? Well, there are several factors at play. First, there's the uncertainty factor. The US President Donald Trump has imposed a new round of tariffs which has increased fears of a potential trade war, which we have been discussing for the past couple of days. Whenever there is an economic uncertainty, investors tend to flock to gold as a safe haven. Secondly, central banks around the world have dramatically increased their gold purchases. Typically, central banks used to buy around 400 tons of gold annually, but this has surged to 1,000 tons per year in the past 3 years. That's a huge increase in demand. And finally, individual investors have been increasing their gold allocation in their portfolios due to continued market volatility. But here's where it gets interesting. As one expert puts it, nobody can explain what makes gold prices move, but it seems to work. The traditional rules that used to govern gold prices, like its inverse relationship with the US dollar or interest rates, have changed significantly, especially after COVID 2019. We will discuss the expert's opinion. Nobody can explain what makes gold prices move, but it seems to work. The expert is none other than Warren Buffett. His famous aversion to gold makes sense for Indian investors? I don't think so. And how much gold you should actually have in your portfolio? Let us see. I want to share an interesting perspective from Warren Buffett, one of the world's most successful investors. Buffett has famously never been a fan of gold investments. But why? In his letter in 2011 to Berkshire Hathaway, he has mentioned that. Like an example, imagine a giant cube made of all gold in the world, worth about $9.6 trillion. For the same amount of money, you could buy all the farmland in the US, 16 ExxonMobils. It was then the most profitable company in the world. Still have $1 trillion in cash left over. A century from that time, that farmland would have produced massive amounts of crops. Those companies would have paid $1 trillion in dividends. But the gold cube would remain unchanged, doing nothing. You see, Buffett believes gold is an unproductive asset. Unlike stocks, which generate profits and dividends, gold just sits there. It doesn't grow, innovate, or pay you back in any way. But here's where the Indian perspective might differ. In our country, gold is not just an investment, it's a cultural asset, a form of security, and sometimes even a status symbol. During the pandemic, when market crashed, gold served as a reliable hedge. When the Russia Ukraine war broke out in 2022, gold prices surged. And now, with fresh geopolitical trade tensions, gold is hitting a new highs again. So, what's the right approach for Indian investors? Let's break it down. First, let's look at long term returns. If you had invested 1 lakh in gold in 1995, by 2024, it would have been worth 16.5 lakhs. Not bad, right? But if you had put the same amount into BSE, that is Sensex, you would have made about 25 lakhs today. That's significantly better. However, in the last year alone, gold has delivered a solid 29% return, which is three times what the Sensex has managed. This highlights an important point about recency bias. We tend to focus on recent performance rather than long term trends. Now, let's talk about silver, gold's less glamorous cousin that's often overlooked. Silver has some unique characteristics that make it worth considering. Unlike gold, silver has significant industrial applications. A decade ago, solar industry accounted for just 5% of total silver demand. Today, that has increased to about 20 to 23%. Green technology is becoming a major driver for silver demand, growing at a rapid pace. As one expert puts it, silver is a proxy for green tech and climate change. If you worry about the world getting hotter every day, then having silver in your portfolio is one way to diversify. Silver prices have gained 11% on a year to year basis, recently crossing the 1 lakh rupees per kilogram mark. However, they have fallen about 3% recently due to the concerns that tariffs might dent industrial demand. So, how about considering silver in your portfolio? So, now to the important question: how much gold should you actually have in your portfolio? Various studies suggest that having less than 5% gold in your portfolio provides insufficient protection against market crashes, while having more than 15% does not add much additional value to your risk weighted returns. But more than that, you need to access the risk in your portfolio. The riskier your portfolio, the more allocation to gold you might need. If you are heavily invested in high risk assets, having gold as a hedge becomes more important. And here's my take on all this: gold definitely has a place in Indian investors' portfolio, but not because it's going to make you rich. Rather, it serves as an insurance policy against economic uncertainty. Think of it this way: you don't buy home insurance expecting to make a profit, you buy it for protection against something goes wrong. Similarly, gold is financial insurance. It tends to shine brightest when other assets are struggling. Before we wrap up, let's address some key points to remember about gold investing. Gold is not a growth investment like stocks. Don't expect it to fund your retirement on its own. Physical gold comes with storage costs and security concerns. So, consider gold ETFs as an alternative. Third, the gold to silver ratio is currently at a 3-year high, indicating investors are becoming more risk averse. Fourth point, central bank buying remains strong, which could continue to support gold prices in the near term. And to the final point, historically, gold returns fall somewhere between fixed income, that is, fixed deposits and other bank deposits, and equity returns. So, this is a safe haven when the times are in a struggle. To sum up today's episode, should you invest in gold? Yes, but with moderation. Consider allocating between 5 to 15% of your portfolio with gold, depending on your risk tolerance and investment goals. Gold isn't about getting rich quick, it's about preserving wealth during turbulent times. As we have seen throughout the history, when uncertainty rises, gold is an appealing asset. That brings us to the end of today's episode of Wealth Your Way by FinSights. We hope this information helps you move one step closer to defining and achieving your unique version of financial success. If today's episode got you thinking about your own rich life and how to achieve it, why not take the first step with FinvestInn? Whether you are looking to optimize your savings, plan for your retirement, or make smarter investment decisions, we can help you create a personalized financial roadmap. Visit finvestin.com or drop a message on WhatsApp at 799 555 to schedule a free consultation. Let's turn your financial goals into a reality. Remember to subscribe to our Wealth Your Way episode on Spotify so you never miss our twice a weekly episode. If you found value in today's discussion, share it with someone who might benefit. This is your host, Naren, signing off. Until next time, remember that wealth isn't just about money, it's about creating the freedom to live your life on your own terms.